Your market news now. Asian stocks swung to a loss and U.S. equity futures fell as slowing Chinese industrial profit growth sapped optimism after last week's equity rally. Chinese shares led the declines as data showed that profits at the nation's industrial companies climbed at a slower pace, suggesting that the economic recovery remains uncertain. Meanwhile, fishing company Oceana reported a surge in profit and grew the sales volume of its popular Lucky Star brand, despite local consumers feeling the impact of the macroeconomic environment on their pockets. Oceana also became the latest company to flag issues at local ports that, with failing infrastructure, could disrupt Lucky Star's global supply chain. To give us perspective on the markets, we are joined by Gary Boyson, who is the portfolio manager at Rand Swiss. Gary, thank you so much for your time. So, let's have a look at market sentiment ahead of what is going to be probably, important data coming out of the US, whether it is the GDP figures or the personal consumption expenditure data. How are we faring at the start of the week?
Yeah, so it looks like we're giving up a little bit of the gains that we saw last week. Remember, we're coming off 4 consecutive weeks of gains on the MSCI World, so to see a little bit of a pullback is not unreasonable. Looking at our top 40, we're down about 0.2%. The resources are bucking the trend, so our resource index is up around a third of 1%, but it's the industrials and the financials that are dragging a little bit. Over in Europe, we can see the FTSE is also down around 0.2%. Paris is flat. Germany also down slightly. As you mentioned in the opening, the Chinese market's also falling around 0.2%. So you're seeing a little bit of a subsidence in global markets. I think, as you say, a heavy data week coming out. The Fed's preferred measure of inflation is the PCE numbers, at least. So I think the market's going to be watching that very, very closely after the big rally that we've seen over the last month. But yeah, nothing untoward. We've got quite a bit of event risk. We've also got that OPEC meeting on Thursday, so lots to chat about.
All right, so we had Zeda release their numbers earlier this morning. That share price up 3.5%. It's currently trading at 12.90. What did you make of the numbers, but also what do you make of the share price performance given that it listed in December at 18 Rand?
Yeah, so Zeda is an interesting company. It's for viewers that don't know, it's essentially Avis and Budget car rental business. It was unbundled from Barloworld, as you said, at around 18 Rand a share, and the share price performance has been dismal so far. So we even after the 3+% rally today, we're trading around 12.90 Rand, and I think there's a little bit of a repositioning in the shareholder base. But looking at the results, a very, very decent set of results. So revenue's grown over 12%, up to 9.1 billion for the year. It's obviously their first results reporting outside of the Barloworld stable, and headline earnings per share growing 17.3%. So if you just back of the napkin calculation on that, you're looking at a stock at a sub 4 PE. So very, very cheap for the numbers that they're delivering. They've also paid down their unbundling debt, which was fairly significant. It was fairly expensive debt as well. Looking at prime -1, it was their most expensive debt. But overall, a very solid set of results for the mobility company, for this car rental business.
We've just come out of Black Friday, and I'm curious to know how important is Black Friday, not just for the South African retailers, but as well the US retailers?
I think it is important, but I think it needs to be taken in context. So, in South Africa specifically, I think the pattern of sales has changed. We have essentially a cost of living crisis. We've seen increases in food, healthcare, transport. And really what this Black Friday has been about is smarter spending. So, if you compare, the South African figures for last year to this year, we're expected to spend as consumers, around 7 billion Rand more than we did in 2022, taking our total to around 26.6 billion spent on the Black Friday weekend and essentially trying to access Black Friday sales. But I think the mix of products is interesting. So we're definitely, as South Africans, prioritizing essentials over luxury items. So it's about milk and cooking oil and detergents these days, not buying new TVs and washing machines and dishwashers. And it really is, it's come down to feeding ourselves rather than anything to do with luxury. So you can clearly see that the higher interest rates, are biting. High inflation is is really taking its toll on the South African consumer. And instead of using this as an excuse to splurge, it's about strategic spending. It's about how can I get those daily essentials at a reduced cost. So yes, it is important for retailers, but it also does to an extent shift the spending, from December and October into the November month. And as consumers are very savvy and try and achieve those discounts.
A lot of analysts or probably asset managers will be working on the 2024 outlook, and that might be quite difficult to look into 2024. How important is the political space or the political calendar for next year?
I think it's a very, very important year for politics. There's no question about that. We've got two big sets of elections and our own elections, which I suppose are pretty big for us. So US elections for November 2024, are going to be absolutely crucial. We also have the likelihood that the UK elections will be held too. And this, I think, the key of these two big international election events is that this hasn't coincided since 1964, that we've had both the US and the UK going to the polls in the same year. The impact for South Africa specifically is going to be that it's very difficult for these two countries to almost create foreign policy, given the polarization of their underlying populations. And it really, if we have a Trump White House again, that's a very different foreign policy. You consider what's happening, Trump's stance on NATO, for example, and how that could potentially affect the conflict in the Ukraine. We have conflict in Gaza. So we've got these geopolitical conflicts. And at the same time, next year, we could potentially have two very different foreign policies for both the UK and the US. It adds a lot of uncertainty to markets. In South Africa as well, we've of course got our polls, and that's always going to be interesting for the likes of the rand, as you see increased politicking ahead of elections, and there is a lot of noise, and you hope that markets can look through that.
Speaking of something we will look through, we will be seeing you in the February of 2024. A lot of the viewers do not know that you'll be taking a break for 2 months, but that is Gary Boyson, who is a portfolio manager at Rand Swiss. And as we mentioned, we have the OPEC meeting on Thursday. OPEC currently, the oil price now just below $80 a barrel, 79.17 is where it's at. And so we're going to be looking at developments coming out of that online OPEC meeting.